I'd say it's very thoughtful, right? They're really thinking about what that beneficiary is paying out of their pocket on maybe a daily, weekly, monthly basis. And they've looked at those costs and really almost negated them.
Good morning, insurance agents of the senior market. Welcome back to Near and Far. It is Monday, October 25th. We're well into fall. Kristen, how are you feeling this morning?
I'm feeling great. How are you, Bill?
I'm well. I know that we've all been making phone calls to our agents, and if you work with Neishloss Fleming, you've got a call to say, "How's your AP going?"
Right.
and one of the things that I think is cool is when we talk to agents, we're getting feedback about what markets are kind of just normal and other markets that are really popping. In terms of your conversations with agents, what's a market that's really going right now, going strong?
I would say that right now, an exciting market is Delaware, for sure.
And you and I actually we had shot an episode on Delaware earlier in the year when Highmark had talked about bringing new product and expanding into that market.
Right, yeah. Before AEP, we talked about that.
Right.
Yeah.
And due to compliance, we couldn't talk to you about the benefit information because, as everyone knows, we're super compliant.
We are super compliant, yeah.
But I guess the question that I would ask you in terms of the feedback you're hearing from agents is, do you really feel like Highmark's shaking this market up?
Honestly, I do. I think Highmark is taking this market by storm. We can take a look at a couple of their products, maybe more specifically.
Yeah, no, I think we want to do that. Let's take a look to see what's moving and shaking in the market. So let's start with Highmark. Okay. They brought two new products to the market in terms of the Medicare Advantage space. What do you like about them in terms of their product offerings?
So, well, first of all, Highmark has a great name in Delaware, and they have their national network, which in the state of Delaware is important because it's so close to other states. And they just are that trusted brand there. So I love all of that going on. But their Freedom Blue PPO Distinct plan has a $35 premium. And it's just a fabulous plan. I think it's one of the strongest ones out there. It's a 0 PCP, 0 specialist, and 0 physical therapy, which I think is great. And the inpatient is $295 per admission.
Yeah, those are killer line items. I mean, the product is Medicare Advantage product. A lot of times is so much more than line items. But I mean, line items matter. Especially those ones: premium, PCP, specialist. Those are critical because they're using them all the times. And to have a $35 product where it's like you don't have to pay for to go to the doctor. Ever,
right? The whole year. Yeah, I'd say it's very thoughtful, right? They're really thinking about what that beneficiary is paying out of their pocket on maybe a daily, weekly, monthly basis. And they've looked at those costs and really almost negated them.
Yeah,
right?
and their ancillary benefits are really strong too, right?
Yes, yeah. So $3,500 comprehensive dental. They are part of the diabetic senior savings model, which is fantastic. And the OTC over-the-counter catalog, $125 per quarter. So it's really generous.
That's a lot of diabetic socks and Band-Aids.
Yeah, that is. Toothpaste, whatever else you might need.
Well, and I always joke about OTC. Like, there's a lot of really good stuff out there, and consumers love it.
Love it. Love it. I know I can speak for my own family. My family members that are on it love their OTC catalog. They feel like they're getting something free. It's just it's a feel good benefit.
So here's what I love about that particular product design with the Highmark $35 plan. You talked about the benefit design being thoughtful.
Yes.
I think it's incredibly thoughtful because what I've seen nationally is plans that are really successful are ones that prioritize benefits that consumers are using on a daily basis because it reinforces the value of what they purchase.
Right. Yeah, because if it's a benefit that looks good on paper but you never use it, it's not as meaningful.
Yeah. It's kind of like there was one situation, Connecticut comes to mind, where they had, I guess, a particular carrier we had in the market had really strong benefits on things that aren't used very often, like the MRIs and the durable medical equipment and a number of these other benefits, which only impacted a small percentage of the membership, a small percentage of the time.
Right.
And the feedback we kept, they just kept saying, we're so much better in this area. We're so much better in this area. And it's like, how many people are using that?
Yeah.
But to be able to go into an appointment and say for a $35 premium, you will not pay to go to the doctor the entire year.
Yeah.
$0
PCP,
PCP, $0 specialist, $0 PT, which is important.
That's very popular. Yeah.
I can understand why brokers are really like jumping up and down for that product.
Yeah, for sure. And so they're also bringing to the market a zero premium plan. And they call that one the Freedom Blue PPO Signature. So zero premium, again, zero PCP. It does have a $30 specialist copay and $30 physical therapy.
Yeah. And I'll tell you what, there is a large percent of the market that won't look at anything that isn't zero. So you really have to, I mean, if you're going to come into a market and try to grow share, you got to have a strong zero. And additionally, you want a value-oriented product like the one we talked about before.
Yeah, for sure. This one does have a $175 inpatient days 1 through 5 charge as well. But still a really strong product. That zero premium, again, it's got to be on the table, right?
Yeah, and I think the ancillary benefits for this particular zero premium product I thought were really strong, because usually on zeros you kind of get up and down levels of ancillary benefits. But the $0 product from Highmark in Delaware, I thought between dental and OTC was really good.
Yeah, $2,000 comprehensive dental, $75 per quarter OTC. So really good.
Yeah, absolutely. No, I'd agree. So I'm interested in your take on the Delaware market, just because it has not traditionally been a huge MA market. And I think to your point that you kind of made earlier, that a lot of that had to do with, folks in Delaware getting services in Baltimore, getting services in Philadelphia or in Harrisburg, or going different places, sometimes for services, maybe limiting the attractiveness level for plans that had a regional only network. What is your take on how these two products are helping an emerging market in Delaware for Medicare Advantage?
Well, so I think two things. One is the network access. So it's accessible to everybody. The network is robust, and it has that reciprocity with the national network. So you can go where you need to for your specialist or your hospital. But also the copays. So if you're coming off a Med Sup, this is giving you those predictable copays, low copays, so you can budget it. You're not feeling like you might not know what's coming next. It's very manageable. Is that what you think?
No, I think I agree. I mean, I think that the access to the Blue Cross Blue Shield National Network for this product is really important. And UnitedHealthcare, that I think we should probably maybe talk about next.
Sure.
UnitedHealthcare was so successful last year, and I think part of that was national network access.
Right.
Yeah.
Right.
So I tell you what, let's talk about UnitedHealthcare now. And I love when Ryan pops it on the screen. He's like, "Come on, Bill, let's get it moving. It's time to talk about United." But they had a huge AEP last year.
They did.
I mean, their growth on their products was really big, and I think that they are also poised for another big year. Where they're going to be competing head-to-head with Highmark.
Yeah. UnitedHealthcare is very strong in that whole region, and Delaware's no exception. So again, leading with that national network that UnitedHealthcare has. And also, just like Highmark, UnitedHealthcare is that trusted brand. AARP, UnitedHealthcare, seniors like it. They know it. They feel confident that they'll be taken care of the right way. I think 1 in 5 seniors are enrolled in one of those products right now. And I think the number I looked at last, they have about 31% of the market share around there. So doing pretty well.
Yeah, no, I'd agree with that. And that, again, they entered last year.
Right. Tremendous.
Yeah, really good. And that $0 PPO that they have, fits along the lines with the way they've really tried to design product nationally on their zeros, where they're zero premium, zero PCP, zero labs. Like they were really one of the first folks to go to $0 labs. And I remember talking to the gentleman who at the time was running their product design in Minnesota. And I said, "What's up with labs?" And he said, if you have someone with chronic health conditions, like two things. Number one, they're getting lab work done, maybe not monthly, but maybe every other month. As well as the fact that if it's $0 labs, we're encouraging them to go. They don't have to pay.
Not a barrier.
Right. And he said that helps outcomes. Like it's really well thought out the way that they've approached that. And I think you see that in the way their star ratings have surged nationally with, I think the lab work is a really key benefit that doesn't really jump off the page at you.
Right. But it's meaningful too. Yeah. So, and even as you age, lab work becomes more of a regular requirement. Even if you don't have an underlying health condition, you might be required to still get that lab work. So very good. Also, it has a strong dental, vision, hearing, also the over-the-counter. So again, that's a very popular choice for folks in Delaware.
I agree. And that's why it was the fastest growing plan in Delaware last year, AP, in the first year of the market, which is really, it's kind of odd because a lot of times, at least what I've seen with new products that come in, what we see is like the first year, like there's some growth because it's like, it's like the exciting new kid in class, but a lot of times when you get to kitchen table, like the network isn't quite right, or, they may be missing some secondary docs. So usually it's the second year in the market, you see the biggest growth. I
agree. Because usually a footprint expansion usually is a modest the first year. People are getting used to it. Everything's new. And then the second year you see the boom. So very, very good move by UnitedHealthcare. They have a couple other unique products too, I think that we should talk about. So they have their Medicare Advantage Patriot Plan, which is their MA only plan specifically designed for vets or people who already have a prescription drug plan. But that plan last year was a really hot topic, right? I think nationally with a lot of carriers, but it still is a very good option. I think agents are more used to talking about the MA only plans, and their Patriot Plan's a really strong offering there for zero premium, a $50 Part B buyback. Again, it adds the dental, the zero PCP, $35 specialist, all for those vets.
Yeah. Well, and there's a large veteran community in Delaware.
There is.
And it wasn't something that I was super aware of really until United went in last year. I mean, we had done some business with Aetna there before, but again, there wasn't a huge swell of Medicare Advantage business going on in Delaware. Aetna kind of softened the market. Humana had been there as well. United came in. It was a big explosion. And now, obviously, Highmark's coming in too. But the more and more we talked to agents, the more and more we were hearing larger than normal veteran population in Delaware. And to be able to come in with a $50 Part B buyback with those types of copays, and the ancillary benefits also really strong on that product too.
They are. Yeah. And then the other products for UnitedHealthcare, always have to talk about their dual complete, their D-SNP plan. And then this year they brought in a partial plan to Delaware. So for those, when you're meeting with a client and they don't quite qualify for the full dual, now there's an option for them. Now there's a product out there to offer. So really good stuff from UnitedHealthcare.
Yeah. And I think that partial plan, even though it's not a huge segment of the population, it's a really big deal because a lot of those people were kind of stuck in between.
Honestly, yeah. It's a very heartfelt benefit because those people who are stuck in between really have it pretty hard because they are cash strapped, right? They're not getting the benefits they need to. So now having this partial plan gives them those extra benefits that really is going to be a game changer. And for the agent, you're not there. You have the right plan to put them into. Yeah, I guess I should say.
Well, and I know that partial product also is available in Pennsylvania, and our PA agents are off the moon about it.
They love it. They all have it in their portfolio. They're ready to go, and now you feel like you can actually help someone a little bit better.
Yeah. Well, I tell you what, for agents that are in Delaware, you've got a great environment to really try to grow between the new Highmark products. United getting even better than they were last year. I don't even know how I choose.
Well, you got to take a look at them and talk to your clients, right?
Yeah, well, that's true. It's a good thing I'm not selling in Delaware because I'd be really confused.
You can't have two, Bill.
Yeah, you know what? If you're on a cruise ship, you can have two.
There you go. Okay, that's another episode.
That is another episode. Okay. So maybe it'll be on Wednesday, October 27th when we're back with you that we'll talk about getting two dinners in a cruise ship. I don't know. But we will be back with you, like I said, on a Wednesday at 7 a.m. This has been Kristen. I'm Bill. This has been Near and Far. We'll see you then.
Bye.